Good morning, ladies and gentlemen, and welcome to the Atlantic Lithium Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so on the Investor Meet Company platform. Before we begin, I would just like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the management team from Atlantic Lithium Limited. Keith, good morning, sir.
Good morning and a heartfelt welcome to all our investors dialing in this morning from all across the world. Our apologies for being a couple of minutes late. Well, I'll kick off. First of all, it's great to be able to share with everyone our progress from an exploration perspective. We've been talking a lot about project development and permitting over the last couple of months, but we thought it's timely that we share with our investor base how we're tracking on an exploration stage. So I'll do the introductions and I'll hand over to Len, Ewan and Abdul, and they'll take you through the slide deck. So if we kick off, for those that are joining us today that's not familiar with the project, I suspect everyone online today knows the project fairly well, but I'm going to try and wrap it up and just give you a snapshot of where we are in 2 minutes or less. So first of all, our project is situated in Ghana. Ghana is a very stable mining jurisdiction. At the moment, there's 16 operating mines in Ghana, 14 gold mines. Ghana has recently overtaken South Africa as the major gold producer in Africa, so well and truly a very robust mining jurisdiction. There's also a bauxite and manganese mine. Then what we're going to talk about today, our resource. So we currently have a 35 million ton resource, and we want to share with you how we think that's going to grow over the foreseeable future. About 80% of that resource sits in measured and indicated, which gives us a lot of confidence in terms of mine planning and knowing what's ahead of us once we start commercial production. Then from an economics perspective, I'll touch slightly on the DFS metrics a little bit later in the presentation, but really a very robust set of economics, short payback period, and that was done at a very conservative price. I remember when we put the DFS out, spodumene pricing was well over $5,000-6,000 a ton, and we were criticized for using a very conservative price. And I think where we stand today, it's really a good show of progress of where we are to use those prices that we have. That's really the pricing that we're seeing in the current market conditions. Then in terms of what we are delivering next, so our mining lease has been granted in October last year. We're currently busy with the final phases of permitting. And there's a couple of key milestones that you'll see come from us in this year. A lot of news flow coming from us, EPA permitting, our mine operating permit ratification, GSE listing, our offtake arrangements, and the final investment from MIF. So that's all I wanted to do, just a quick wrap up. Len, if I can hand over to you, please, and if you can take us through the slides. Thanks, Len.
Great. Thank you very much, Keith, and hello everyone. It's great to be back here again on the Investor Meets platform, and this time to have the geology team here in front of you. So we're pretty excited to take you through our journey and to show you what we've been busy on and what we're planning to do in the future moving ahead. But first of all, I need to introduce you to our team. So I've got a couple of the key members here. You'll notice Ewan Williams, our exploration manager, is on the call. He's currently in Ghana. Hopefully our internet connection there keeps him on throughout the call. And then we've also got Abdul Razak, who's currently our country manager, but actually previously joined us as our exploration geologist and principal geologist. He was actually our second longest serving senior employee in the company, so very familiar with the geology. So you're in good hands today, but I think what the main point I want to point out here is that the majority of our team, which you can see there, this is our senior leadership team and in-field team, are predominantly Ghanaian, and they've got a wealth of exploring and exploration experience, in particular exploring for pegmatites in tropical terrains, and that really is a point of difference. It's hard to explore for pegmatites in areas of tropical weathering, and simply because lithium washes out the rock so easily and you're just left with very little telltale signs to follow up. So we're in good hands here, and many years ahead of exploration. So this is just to set the scene of where we are. You're all familiar with this. This is our portfolio holding in Ghana. It's 509 square kilometers in total. And then, of course, we've got our 2 applications in Ivory Coast for a further 774 square kilometers. So a total of 1,283 square kilometers. And we're obviously actively exploring in Ghana. We made the Ewoyaa lithium discovery, which currently sits at 35.3 million tons at 1.25%. And we also know of the historic Ejimanku Hill lithium occurrence, spodumene occurrence to the east of us. So a large portfolio right on the coast, right next door to operational infrastructure. You really can't get a better location than that in a very supportive pro-mining jurisdiction of Ghana. Now, before we commence on any exploration journey, it's critical that we have a management team that's highly supportive. And this is something that Atlantic Lithium did have in its early days and still has now. And you all know Vincent Mascolo here. So hats off to the late Vincent Mascolo for getting this team together, supporting us through those capital raises, through tough times, good times, but he was always there. And that is really critical for any junior exploration company to get out through the gates and make discoveries. Without management support, you can't make discoveries. In addition to that, it's a small, nimble team in country. You can see us down there in that lower slide, the lower photo. And finally, in addition to that, is a supportive community. So that engagement with the community, you can see us there with the Anochi traditional leaders, is absolutely critical to get things done in country. So this is how it all started back in 2016 or thereabouts. I've been following a story of the Goulamina discovery in the early days, and this is a slide from back then. I'll just let everybody know that all of the information in the slides here is all in the public domain. So it's all out there on our website. Anything else you want to find out more details on the website. But here we're looking at a map of the Birimian. So that's a geology map of the West African Birimian. And we've been following Goulamina lithium. And from my perspective, it was clear that surely those deposits don't just occur in Mali, they do occur elsewhere. So we completed a top-down geological review, looking at metal occurrences, tin, niobium, tantalum, feldspar, looking at the right geology, looking for granites within metasedimentary basins, schist basins. And then in my perspective, also looking at areas with good operational and jurisdictional support. So Ghana and Ivory Coast were high on the list, and where they're close to a port or to roads. And through this process, we identified Ghana, and in particular the Cape Coast batholith and Ivory Coast. So with those initial areas circled, we then dug deeper, and this is when we came across a very important discovery in those early days, and that was a thesis done by Mrs. Amoka Mensah, and she's still very active in the mining community currently. She actually completed her thesis as a female geologist back in the 70s in the University of Leeds, of all places. And I believe she's the first female geologist in Ghana. So she completed her master's thesis on the spodumene occurrences of Cape Coast. And that was one of the key search words I was looking for in a Google search on Ghana, lithium, spodumene, Cape Coast, and this thesis came up. So that was, I literally struck gold with that. But then through further digging through archives, and with the strong help of the Ghana Geological Survey, which was also an invaluable step for us, we came across some old archive reports from work that the Geological Survey had done throughout Ghana, throughout the 30s, 40s, 50s, 60s, and 70s, where they're really focusing on feldspar kaolinite, because there was quite a strong or large kaolinite industry in feldspar ceramics industry in Ghana. But through that work, the Geological Survey, which was strongly affiliated with the British Geological Survey at the time, identified spodumene as well. So those both those reports really helped us focus our efforts in Ghana and get onto the ground. And from there, the rest is history, which is what we're going to go through now. I mentioned earlier the communities. This is paramount anywhere you operate, and it's no less or no different for us in Ghana. We've embraced our communities from day dot back in 2016 and continue to do so. They're integral to us achieving our results and together delivering Ghana's first lithium mine. So that's something I'm very proud of, and it's good to see that as we move into the next stages of this company's life towards building Ghana's first lithium mine, we're still very strongly integrating and working with and embracing our communities. So this is what it actually looked like. This is back in May 2017 when we announced our first results. Now you could call this your discovery results, but there are lots of different ways to measure a discovery. For me, it was our first ore grade drill intersection, but no less, this was a pivotal moment for us where we announced some really significant rock chip results. And this is what the field actually looked like back there before any road access or drill pad access was completed. And you can see the results there of our bulk rock chip sampling, in addition to trenching. And you can see some of those outcropping pegmatite boulders in the background on that photograph. So that's what it looked like back in the early days before we'd done any drilling. And we'll now hand over to Razak, who will take you through our exploration methodology.
Thank you, Lynn. Our exploration methodology, as Lynn said, our target definition methodology begins with surface traverse geological mapping, followed by the utilization of airborne geophysics. The airborne geophysics normally carried out with radiometrics and magnetic, but the radiometric data obtained from the airborne geophysics play a key role in generating targets. For further exploration, in addition to that, we conduct soil geochemical sampling across the entire tenement area. We collect samples where we analyze the samples in-house using handheld portable PXRF and LIPS analyzers. Based on the results obtained from the in-house analysis, the targets generated from the airborne geophysics, we proceed with additional investigation measures such as trenching, test pitting, auger drilling. These methods are employed to confirm the bedrock geology of the target areas. If the outcomes of the trenches, test pit, or auger drilling proves promising, we plan a low impact drilling program using an 80 meter by 40 meter grade spacing. Next slide, please. Yeah, so as I said earlier on, our soil geochemical sampling, we conducted it on 100 meter by 100 meter grade spacing. And the outcome of the lithium in soil are depicted on the map here in red, and also our early radiometric with the potassium and cerium ratio. The target generated out of it, we combine the two, the soil, lithium in soil, and the radiometric to generate targets from our interpretations. Next slide. Yeah, to date, we have drilled over 150,000 meters of RC and diamond drilling in the resource category. We normally start with 80 by 40 meter spacing, grade spacing, which we term as inferred resource. Out of the inferred resource, when we receive the result from the laboratory, we do 40 by 40 meters indicated category resource drilling. Then when the result comes and the results are quite encouraging, we follow up with 20 meter by 20 meter measured resource category. Currently, drilling is ongoing, and I believe we are going to increase our resources from the drilling campaign. Next slide.
Great.
Yeah, Len,
You're okay
I'll
to
hand
go
over
with
to
this,
Len
Razak?
once again. Yeah.
Okay. Yeah, great. Thank you very much, Razak. That was a wonderful oversight, and it really points out the systematic exploration methodology that we've generated over the years, and now we implement as routine across our portfolio, and we'll also likely utilize in any other portfolios such as Ivory Coast or new opportunities. So these slides that you'll see now are really to give you an indication of the spread of our geological understanding to date. So it gives an insight of what our geological understanding is now, from subsurface data such as geophysics, through to soils, which is surface data, through to auger, which is pretty shallow, down to an average 5-6 meters throughout our Ghana portfolio, and then RC and diamond drilling, which is really that next step down to 50 meters, 100 meters, or in our case, our deepest hole around 350 meters. So it's really telling in terms of, it ultimately shows you the lack of data we have once you're looking at that 100-meter depth slice and lower, which really means exploration upside. So this is our geophysical spread. You can see all our licenses there. It covers all our granted licenses, bar Senya Braku. So that's one potentially we'll look at to fly a geophysical survey going forward, depending on early results. If I then click to our next data set, so these are our current soils data. So you can see it covers all of our western portfolio on the left-hand side over the Ewoyaa deposit. And we've collected soils now over the Cape Coast license, which is the westernmost license currently outlined there in white. So we now have soils collected over that, which we're currently processing through our in-house laboratory with XRF and LIBS, which Razak mentioned earlier. And then on the eastern portfolio to the right, you can see Apam East and Apam West covered. But again, Senya Braku and Bwedzi, we currently don't have any soils over that. So that's something we're working on now with our regional programs. Stepping to the next level of geological understanding. So this is now where we're looking into the subsurface. So we're looking on average 5 to 6 meters depth. So it's still very shallow. But this is our auger drilling spread. So you can see a concentration of auger holes around the Ewoyaa resource. And that's understandable. That's where you start, where your knowledge base is highest, and you're stepping out from that to the unknown. And you can start to see to the left where we've completed new auger drilling over the Salt Pond license. Currently no auger drilling over the Cape Coast license, and then some limited auger drilling over the Apam West and Apam East licenses. And now stepping to our deepest geological understanding. So this is actually RC and diamond drilling. So this is data where you're looking at that 50 meter down to 300 meter vertical depth slice, but on average, probably around that 120 meter mark, or maybe even shallower. So really not much coverage at all. And it really shows that that whole field is open for exploration, and there's a lot more work to do in terms of finding further resources. Yeah, and that's basically showing all of those data sets on top of each other. So our current center of knowledge of the world is Ewoyaa, and we're stepping that outwards. And here it is shown in all our releases over time over the Ewoyaa deposit footprint. So back in May 2017, that discovery outcrop with the trenching and rock chip sampling results on the top left, you can see there, this is the timeline going from top left to bottom right. You can see it's very basic geological understanding, just a few lines of trenches and a few red blobs. I mean, that's how we tend to think early on as exploration geologists. It doesn't get much more complex than that. But then as we get more data in this case, further trenching, more trenching back in November, again, more trenching in December, and then our first drilling program in August 2018. You can see our geological understanding and that shape of that pegmatite is improving. And is in August 2018, is my point in the sand in terms of declaring this as a discovery. It was our first drill hole. From memory, it was 111 meters at 1.3% lithium oxide or thereabouts. So that was a significant drill intercept, and that gave us the confidence to really start to hit this harder, along with that management support and Vince pushing hard to then complete all these rounds of drilling through January, which was it's hard to see the numbers here, January main resource, and then our resource upgrade going from 14.5 to 20 million tons, and then up to, my eyes aren't good anymore, then all the way up to 35.3 million tons where we currently stand. So that really gives you a strong understanding of that improving geological understanding over time. It doesn't happen overnight. It takes persistence and a very systematic approach to really get to grips with your geology and define your resource. And ultimately, as I said, we now currently stand at our 35.3 million ton resource at 1.25% as of our most current resource upgrade. But we're moving forward. So we've got all of our drilling completed last year, so in the order of 26,000 meters. And all of that's going to be feeding into a resource upgrade once we've got the remaining results from our dogleg expansion drilling that we completed this year. We're still waiting for some final results on those holes in the diamond tail we did before we feed it all into a resource upgrade for H2 this year. So look out for that. And it would be remiss for me not to show a picture of rocks. So this is what it's all about. This is what we're trying to explore. On the left, you can see a really coarse-grained spodumene outcrop material. This is at the Ebonku quarry. Very coarse spodumene crystals in there in that greenish color next to the hammer. And then in the center, you can see one of our RC drill holes. So these are the chip trays. So this is a record of the drilling samples that we collect on the drill rig, and just as a library essentially that we can go back to over time when we're starting to dig deeper into the geology. And there you can see some beautiful spodumene chips in that nice, beautiful green color. It's amazing stuff. And then on the right-hand side, you can see it in drill core. And this is the stuff that gets geologists also really excited. There's nothing better than seeing a whole box of HQ drill core and spodumene pegmatite. That's absolutely wonderful stuff. And it's what we're trying to find more of. I'll just hand over to Keith here now, because all of those things feed into these important numbers from an economics point of view.
Excellent. Thank you very much, Len. It's really great to see how it's progressed. So what I want to do is I just want to, all of the work that we've done up until the February 22 resource upgrade has amalgamated into the DFS, which we published in June last year. So these are the outcomes of that DFS that we conducted. So the processing plant will take about 2.7 million tons of ore per annum. And from that, we'll produce just over 360,000 tons. This means we'll be the third largest spodumene producer in Africa. When they are in production, Goulamina will be second. That's Leo Lithium's project that Len also referred to a little bit earlier. And when Monono comes into production one day in the DRC, that will be the largest. So really quite respectable in terms of size. Output, so as I mentioned before, the pricing that we used in our DFS was $1,400 per dry metric ton. Today, still the long-term pricing somewhere between $1,500 and $2,000, depending on which commentators you listen to. We still believe in the short term it's going to be higher to maybe slightly higher than the 2,000 mark. But long term, we're preparing ourselves for that 1,500 over a prolonged period, just to make sure that we're robust against those downturn and cyclic nature of the spodumene market. So the NPV of the project, $1.3 billion on an NPV 8 basis. And very impressive, the all-in sustaining cost is only $675 per ton. That's extremely important for us. What we've seen In the last 2 years, spodumene has been the best performing commodity and also been the worst performing commodity. So it's very important for us to have a low unit operating cost that we can sustain those downturns and really capitalize and take full leverage and advantage of when the prices are going to go up in the short term. I think we can hand over to Ewan now. Ewan, if you do have connectivity, to talk us through what's next, what is in the plans for us for 2024 and onwards.
Okay, I hope you can hear me there. This map shows all our current tenements and some of our applications, and it extends over quite a broad area, over 90 kilometers from east to west. The majority of our activities have been focused on defining the Ewoyaa deposit. And as we progress further outwards from there concentrically, we have less information and less knowledge. So going forward, we're going to enhance that by expanding our working practices, which are showing good results in the Ewoyaa area. So we will expand with further soils, followed by auger drilling, and followed by deep drill confirmation. Next slide. In the Ewoyaa mining area, Mining Lease area, and outside, our current drilling focus has been on within the 2 kilometer radius of the mine site. We will expand that in the coming year. We will extend to the north around the Asan area, and that's with further evaluations there. And in the Otsir target, we have already defined with auger a drill target, which we will assess later on this year with some RC drilling. Okay, currently the resource is still open at depth in some of our prospects at Ewoyaa Northeast, at Grasscutter and Okwesi prospects. We still need to do some further drilling in there, and some of that drilling is planned for this year. And then it's an iterative process. If we get success, then we will go further and deeper and assess it further, because the potential will always remain there if the mineralization remains open. So we will continue and assess that this year and going forward. In the Dogleg area, which we've been drilling this year, this is an interesting prospect. We had an early hole in there, which we thought connected directly with the Ewoyaa main, but once we reviewed the drilling using Leapfrog and other 3D software, these are powerful tools, we can see that the geometries didn't quite fit. So we added some more drilling in there, and we discovered we have what we call a sill-like form. It's a shallowly dipping pegmatite dipping to the north. And we've had a similar one in the Ewoyaa main sill, which is a northern yellow circle in Ewoyaa. So it's almost a duplication of that, but at a shallower depth. So this is going to be great for adding low strip ratio tons early in the game. Okay, we've been successful at lifting the resource every drill program. But now the current MRE will be updated later this year. So we're hoping for another increase in that resource, and hopefully in future years as well. The focus of our Western portfolio in the last year has been with auger on the Salt Pond license. Now we've identified robust geochemical targets, which we followed up with auger, and we've identified pegmatites and mapped them out, and we will follow up these pegmatites with RC drilling in the coming year or two, and this we'll use them to assess the continuity of mineralization with depth, and also if it's successful in finding the mineralization, we will define its attitude and extent. In the Cape Coast license, we're still continuing with the soil program and its evaluation, and there have been teams doing some mapping along anomalous areas. We will follow that up with further auger work later this year and going forward. Okay, our target strategy in this Western portfolio has always been we do the soils, we follow up with the auger, we combine the soils with the geophysical anomalies, and we focus our attention on areas where we think there's going to be a high likelihood of pegmatite development. One of the criteria we've used is an old Geological survey stream sediment database, which showed prevalence of beryllium in the stream seds. And some of these beryllium anomalies coincide with an area close to the Ewoyaa mineralization, but we've also identified further areas in the Cape Coast and the Salt Pond area, and we found pegmatites in these areas, so there's good prospectivity in these zones. In the Eastern portfolio, we've concentrated on Appam East, which is adjacent to the known Ejisamanku Hill spodumene pegmatite deposit. And we've found the old trenches, and we've done some extra auger work, and we've defined a corridor where the pegmatites extend into that license. We have an application which has recently been granted, Bewadzi, where we are still undertaking some community sensitization before our team gets on the ground there. But the geochemistry and the geophysics indicate that the pegmatites extend into the southern end of that license area. So there's great prospectivity in that BL. And we will advance that as soon as we have the community and local authorities okay to get on the ground. On our longer term strategy, we will continue to explore around the resource, but we have other areas in Ghana where we can advance our knowledge. We have many license areas where we are just starting, we are just commencing our soils, and we just need to get our teams on the ground. We literally haven't got our teams on the ground in Senya Baraku and these new licenses, and the Cape Coast is still early stages. We have soil results, but we need to follow all of that up. And outside of this area, we are actively looking for opportunities in Ghana. We know there are more pegmatites in Ghana, and the regional geology is good. So we think there are more opportunities in Ghana for spodumene-bearing pegmatites. Outside of Ghana, we have 2 license applications in Côte d'Ivoire, which we are waiting to be granted, and that offers similar prospectivity. It's an area where spodumene has been recorded in the historical record by the IGM in probably pre-60s. But yeah, these offer great opportunities for us to explore. Who's doing the milestones? Not me. Key milestones ahead. Okay. As you know, we have drilling to be completed in 2024, which will hopefully add incremental tons to our Ewoyaa deposit. The mine lease application has been ratified, or will need to be ratified, and we need to gain the EPA permit, the mine operating permit, before the mine can get going. So these are key milestones that we need to achieve going forward. We are awaiting the final results from the Dogleg prospect. That will be coming in soon this year. All the identified, well, quite a few of the identified pits in the DFS mine plan still remain open at depth, as discussed. We have new targets that have been defined by the auger drilling in the Saltpond area that need, and in the Mankasim PL that need to be drill tested. We need to commence our regional exploration in Senyabraku, which will be very soon. We have licenses which adjacent to the Edges Manco Hill deposit, which are highly prospective, and we will hopefully get to explore these in the very near future. And to get all together, we have 1,283 square kilometers of tenements that need to be explored and evaluated in both Ghana and Côte d'Ivoire. And the vast majority of that is undrilled. So it's open for us to discover. Okay, we are waiting for some licenses to be granted, which are under application, both in Ghana and Côte d'Ivoire, and we are working hard to move those forward. And we will be assessing for other new opportunities in Ghana and also other jurisdictions in the region. So, hand back to Keith.
Excellent, thank you, Ewan. Just before I hand over to Len to take us through the Q&A, if you still have any questions, please feel free to add it to the chat group now. We've got about a dozen or so that we want to work through. We want to try and answer all of those if we can. Perhaps if I just summarize quickly, Ewoyaa has gotten to a stage now where we're nearing the construction phase, and we've got a good 12-year mine life ahead of us. For spodumene mining, that's quite impressive. For a small-scale project where we started out, to have a decade in front of you is very useful. We want to maintain that, so as we are mining our ore reserves out, we want to replenish it at the same rate in which we're extinguishing it. But equally, we want to see step changes as well. So at the minute we become cash flow positive, or the minute we get our funding in from the Minerals Investment Fund, as well as our offtake process we're running at the moment, that then allows us to spend more of that on exploration. We're very mindful that we don't explore at the cost of dilution to our shareholders. We've got a very respectable mine life and a project, so we want to build that from cash flow out of the operation. So Len, maybe if you want to take us through the Q&A, if you wouldn't mind, mate. I'll hand over to you. Thank you, Len.
Great, thanks, Keith, and thank you, Ewan and Razak, taking us through this story. So now we'll get on to the Q&As. We started 10 minutes late, so I think we're pretty much bang on time. We've got 25 minutes or thereabouts of Q&A, so keep them coming through. We'd be happy to answer all the questions that come through within reason, obviously with a bit more of a focus on the geology and the exploration front, but we'll do our best. So first question, I'll take this one. When do you see another major drive on increasing the resource size? Will some of the new MIF funds and offtake funds be invested into it? So as I said earlier, the 26,000 meters of drilling completed in last year, 2023, is all going to be fed into a resource upgrade, in addition to a further drilling completed early this year on the Dogleg target. So those will both feed into a resource upgrade due later this year in the second half, early part of the second half. And then, of course, we're going to keep drilling. So you would have seen on some of those maps and in our releases the proposed programs on the deep extensional drilling at Grasscutter, Okwesi, Krom, Ewoyaa Northeast. And all of that will then eventually feed into another resource upgrade, probably early in 2025. But supporting us throughout this, MIF funds and offtake funds will help push more dollars into that drilling going forwards. This one is one for Ewan. So in respect of your 774 square kilometer lithium portfolio in Côte d'Ivoire, are airborne geophysics planned as part of your exploration work program? Ewan.
We will evaluate the property and see if it will add the useful information we require. We will assess it. It could prove very useful in identifying more prospective areas that we should concentrate our work on, because it is a very, very large portfolio of licenses there, a big area to cover. So I think it could help us. We will assess it and see if it's good for our program.
Yep. Yeah, for us, it's always, there is a cost benefit analysis as part of that. And obviously we'll do our initial reconnaissance, mapping, rock chip sampling, and on the basis of that decide, yes, here we're going to deploy airborne geophysics and this is what the cost will be, and then decide the best course of action. So next question, one for Razak, because he's been involved with this a fair bit through his country manager role. Is the company receiving the necessary governmental support needed to ensure the smooth takeoff of its operations in Ghana?
Yes, the government has been very supportive. Sometime last year, there has been some civil society organization asking a lot of questions. The government embarked on sensitization throughout the country. They organize community and stakeholders engagement to support the company by explaining where the company has gotten to, what agreement has been signed to date, and the way forward. So I think the government has been very supportive, and we look up to them to also assist us in achieving the remaining permitting on time. So the government has been very, very supportive. Yeah. Thank you.
Thanks, Razak. And I'll add to that, the communities have also been a very strong voice in their support of the project, which is a huge endorsement and actually does sway a lot in terms of that governmental support. So they've certainly been a strong voice and advocate for this project. Okay, next question. This one's for Keith. The market for lithium is very depressed and is expected to remain in surplus for the next 3 to 4 years, Benchmark Minerals. How does this affect you?
Thanks, Len. I'll take that one, and I'll take the other one that I'll repeat just after this. Look, for us, this is ideal opportunity. What we are seeing is happening at the moment. If you go back 12 months, there was probably over 100 listed ASX, TSV, TSX, and AIM companies that were playing in the lithium space. What this depressed price has done is it's really sift through those that's going to make it and those that are not going to make it. This has been very beneficial for us because one of the things that we've seen in our share price that's remained suppressed is there's a lot of options and there's a lot of choices for investors to make when it comes to the lithium space. What this is doing for us is it's demonstrating that our project is viable, and it's perhaps showcasing that some of those lower prospective and higher cost projects are not going to make it. So a suppressed price in the short term is not a problem for us. We'll only be in production towards the end of 25 with the modular and early 26 with the main processing plant. So it's prices at that time that's important for us. But again, we focused on being a low-cost producer. That's the only way you're going to make it through, and you're going to have a long longevity in life. There's another question that asked about the 4.7 million tons of secondary product that was up on that slide when we talked about the DFS metrics. So I'll take that one as well. So what that material is, it's the fine ore that comes naturally through the process plant. The DMS doesn't do very well with fine-grained ore. So what we are looking to do with that is sell it as a low-grade product. And the low-grade market is still very healthy. There's millions of tons being exported out of Africa at the moment. But what we intend to do, this is about 12% of our revenue stream. So that $6.6 billion revenue that we'll generate over the 12 years, about 12% of that stems from this lower grade secondary product. We've completed a flotation plant study late last year that demonstrated exactly what we expected, is that this material would be ideally suited as feedstock for a flotation plant. So the question of do we sell it as a low-grade material or do we sell it as a concentrate? Our preference would be to sell it as a concentrate for a couple of reasons. It de-risks us against the low-grade market in the first instance, and secondly, it attracts a premium. You get much better value for the lithium units in that material if you concentrate it. And then perhaps lastly, it's a much better logistical exercise to transport it in a concentrate, because you get a mass yield of about 15%. So therefore, you only need to transport about 15% of the material, and the value per ton is much more significant than selling a low-grade product. Then over to you.
Yeah, so I think the next one as well, assuming we can get the resources well beyond the current 12-year mine life, is the plan to add to the production? And if so, can this be done easily on a modular basis?
I'll answer that in two parts. So the question is, if we have a significant resource growth, are we going to increase mine life? Or are we going to increase throughput? We have to look at it in the context of the broader market at that stage. So if this were to happen tomorrow, for argument's sake, so if we were able to declare a 50 million ton resource tomorrow, then I would suggest it would be foolish to increase throughput immediately, because we're not seeing that demand right away. What we want to do is be in a position to accelerate production as required. So in terms of adding units to the processing plant, there's two ways we can increase the throughput. We can either install an additional train, and we've left the footprint to do that, should it be required. However, our focus at the moment is to deliver a 2.7 million ton plant over 12 years. So we want to focus on that first before we start getting carried away with increased throughput capacity in the future.
Okay. Will Atlantic be competitive against DLE extractions in Argentina? Keith?
So I think before we look at DLE, we first have to consider conventional brine deposits. So when you compare the cost of LCEs from a spodumene mine compared to a brine deposit, brine is a cheaper LCE unit. So therefore, I would expect that a DLE would sit somewhere between the cost of brine per LCE and the cost of a spodumene converted LCE. One of the considerations, however, is that to date, there's not large-scale demonstration that DLE is going to be successful. I believe it will be successful. We've seen large players in the oil and gas space that's entered the sphere of DLE in brine. So I believe it will be successful. It's going to be slightly cheaper still than spodumene conversion, but the drawback is the time to market is extended. Whereas with a spodumene mine, the experience and the time it takes you to get molecules into the market is quite quick. So I think we'll remain competitive from that perspective. But there's certainly a future for DLE in the mix.
Okay, thank you. Does Piedmont have offtake rights over all future explorations in Ghana or only for the Ewoyaa project? I'll answer that one. It's for all projects in Ghana. So done. Where is the best place to look for documents showing the keep moving. Where is the best place to look for documents showing the geodata you've shown today, particularly the spatial depth of Ewoyaa pegmatites? I'll answer that one. So all our drilling results, our releases include collar positions and from-tos for intersections, drill hole azimuth and dips, in addition to a handful of highlight cross-sections. So that's probably the best source, and then those are also included in our presentations. I believe at some point we're working on a 3D animation to include on our website, which will include a 3D view of our resource model in pit boundary, so you can see that clearly. Okay, when do you expect first production, Keith?
So the modular DMS in 2025. And then main production out of our plant in 2026. I think it's going to be around the second quarter. There's a little bit tied to ratification, so we want to make sure we get ratification done. But we'll surely be fully ramped up in the second half of 2026 from a commercial production perspective.
Thank you. Okay, a geology one. Are you coming across other pegmatite mineralogy besides spodumene? tin, tantalum, lepidolite, petalite, niobium. Ewan.
We have the good grace that the Ewoyaa pegmatite is spodumene bearing only, no other significant lithium bearing minerals at all. We're talking trace of anything else. We have no tin, no other metallic credits. The only other byproducts will be the feldspar and maybe any quartz and muscovite. But in the region of Ghana, we come across other minerals. If you go towards Ejisamanku Hill, there is tin, there is tantalum. So in other parts, but Ewoyaa, we're lucky, it's lovely and clean.
Yeah, thank you. Okay, in today's economics, what do you see as economic open pit limit at Ewoyaa from a depth perspective? Keith?
Sure. Look, I think the natural tipping point where you're going to switch from open cut to underground is at a stripping ratio of about 1:16. So there's one of our pits, grass cutter, that's at a stripping ratio above that. So arguably, we could make a case to mine that section of the ore body underground. It contains about 3.5 million tons of ore. So the second thing you need to look at once you've established what that tipping point is, which I'm suggesting is around 1:16 from a stripping ratio perspective, is what is the critical mass that you need then to go underground. Again, from the work that I've done on other mining projects, we think it's about 5 million tons. So what we would want to see before we contemplate underground operation is those deeper areas that we've identified and that we have a drilling program planned for, is once we can reach around the critical mass of 5 million tons, inclusive of that sits in the grass cutter deposit, then we can seriously start thinking about a different mining methodology for those deposits. It will all up be a cheaper proposition than trying to mine that open cut. So just to summarize, 1:16, it's about a mining cost of around $900 a ton is where you're going to see the transition to underground.
Right, thank you. Okay, quick one here. Great preso, gents. Love the passion. Thank you, Duncan. Okay, another question. Cost per meter all in for drilling currently. I'll answer that one. So RC planning and budgeting, we're looking at roughly in the order of 95 US per dollar all in drillers costs. That's probably going up a bit now to the $100 mark. Diamonds around the 250 US dollar per meter. That's for HQ, average HQ and PQ, but we drill predominantly HQ. That's probably also going up a bit higher to the like $280 per meter mark. Okay. Will the increased resource lead to a larger mine plan in the near term? Yeah, I say any additional tons that feed into the resource above the 35 million ton, depending on that resource upgrade, will be absorbed into that mine plan with a longer mine life, or you're limited by the mine throughput on that crusher design. But I don't know, Keith, is there any other insight you can throw to that?
I think the best way to describe it, Len, is the organic growth. So these sort of campaigns that we've been doing in the last 5 years, where it's between 30 and 50,000 meters per year in the dry season, that will likely only lead to mine life extension. It is when we tackle those 5-6 drill rigs on site and we drill 100, 200,000 meters in a dry season, when we've got a sufficient cash balance, those are the ones that's going to change the economics from a throughput perspective.
Okay, thank you. Okay, is exploration being constrained by available funds? Will exploration ramp up once the MIF funds are received? So I think any explorer, developer, cash, being prudent with your cash is very important. In our case, exploration will now recommence drilling in the coming quarter, whilst we're waiting for all of the results from 2023 to feed into that resource upgrade. And then we've been carefully managing our funds across the board through this period of time. once we come in with mid-funding and offtake. Okay. Do you think selling the low-grade product, e.g. to China, only increases the chances of a continuation of low lithium prices out of China? Would some sales discipline in the lower grade product be more beneficial in terms of lithium prices in the end? Keith?
Yeah, I'm happy to take that. Look, I think as long as we see a lepidolite market, and there is a strong lepidolite market in China, that supports the lower grade spodumene pricing. I'm personally not a fan of low grade. We've seen the market collapse in 2018 when Pilbara Minerals and Minres out of Wodgina flooded the market with low grade. So I don't think it's prudent. It's prudent that we are very disciplined in that. However, we don't want to be left behind. You know, as a company of the scale we are, we can't take the high ground and restrict and limit the amount of low grade we put into the market. At our size, you know, we do not have a monopoly. We just have to participate of what's available. So I don't think strong discipline on our side is going to change the market dynamics. However, out of principle, I believe a low grade market will suppress pricing. But you know, what fixes low prices is low prices. Thanks, Len.
Yeah. When do you think you will be able to order the components of the plant, and if you will need to pay in advance for them?
So we're still, sure, Len. So we're still looking to order long lead items now in this coming quarter. We already have contracts in place for some of that equipment, the likes of MCCs, power line relocation, and also some of our crushers that we require. We're busy selecting an EPCM contractor. We've worked the last 6 months with a very well-known EPCM engineering house based in Africa. So those guys have been really good to set up these contracts for us. So we'll execute them first in the next quarter or two. We still have time. We are not desperate to place it immediately. There's still a bit of lead time on those items. And we will place orders prior to FID if it's required. Our initial response would be to place orders upon FID. However, if there is for any reason a slip in timeline, we will be placing orders prior to FID for those very long lead items that's on the critical path.
Yeah. Okay. There are a couple of questions here on processing study, which I'm assuming is the conversion study in relation to the ML. So has there been any feedback on the processing study? And one of the other questions along the same vein is, does it make sense to build a downstream plant in Africa strategically, economically, and technically? So perhaps you, Keith, firstly on the actual study.
Sure. So as part of the requirement out of our ML, we had to submit that study to the Minerals Commission in April, and we did so. It was received very well. The long and short of the downstream study is you need about double the size of Ewoyaa, and it needs to be twice as long in mine life. So you need a resource of about 70 million, and you need a mine life of 20 years to make it viable in Ghana from what we're seeing at the moment. There are currently prospects of building conversion capacity in Morocco. So that could be a natural pathway for our material to go. However, currently downstream in Ghana, you want to see a lot more resource come into play, and you want to see that over a longer period for it to really be viable.
Great. Thanks, Keith. 3 more minutes here on questions, so I'll pick up one here. Looking back, what were your worst challenges? I always see challenges as a positive, but I guess from my perspective, the most taxing time on me personally, and I think for the company, was the passing of our former CEO, Managing Director, Vincent Mascolo. It's very untimely, but the team pulled together. We kept the company in the ship steering true, and now we're in a strong position, hopefully coming out the tail end of a lithium low, and being one of the very few permitted, near shovel-ready hard rock lithium pegmatite projects out there. So I think we're in a good position now, despite those challenges we faced. Okay, one for Razak. I would think the government would want to get the royalties, taxes, etc. ASAP. Are there delays expected, or is this a normal process?
Yeah, I think currently we are going through the permitting process. We have completed with the scoping reports. It has been published in the newspaper. The first public hearing has been held within the community. Currently, the EIA has been commenced, and we have to go through the EPA. So it's the permitting process. And I think the government is really pushing us so hard to fast track it, but it's going through the permitting processing with the Environmental Protection Agency.
Great,
So
thank you, Razak.
I think, yeah.
Okay, how can I buy shares of this strategic business when I'm in Ghana? So we are listed on London AIM and Australian ASX, but we're going through the process of our Ghana GSE listing, which perhaps, Keith, you can shed some light on that one.
Sure. Very soon we'll be listed on the GSE. Our expectations is that it will happen in May. I've got May basically penciled out to return to Ghana on a moment's notice for that joyous moment. And then the end of May, I'm heading to China to go and see a couple of our offtake partners as we are approaching the finalization of that. So within the next couple of weeks, a month or two, you'd be able to buy shares in the company on the Ghana Stock Exchange. There's another question on politics and upcoming election in Ghana and how that influences us. So look, the parties haven't been playing games when it comes to permitting. Ghana is a nation that's had many safe transitions of power and peaceful transitions of power. We've been speaking to participants on both sides of the political aisles, and we've got broad support from all the parties. So we don't see that as a threat at all. If anything, it's likely that we want to see, a good continuous program with everyone involved.
Great, thank you. Okay, and then the last question I have here: is there any feedback from Piedmont on their progress funding their Tennessee production plant, which is the site for our offtake product destination with them? Keith, have you got any update on that one?
Sure, yeah, I'll take that. Yeah, we've been talking to Piedmont quite regularly, and I had a conversation, and we understand, Keith Phillips had an interview a couple of days ago. We talked quite in detail about their plans around Tennessee. So Tennessee is a couple of years late, so about 2 to 3 years is what I took from his presentation. However, that is not critical for us. Piedmont has an offtake right, and they can take this material anywhere. They still have Tesla and LG Chem contracts to fulfill. So they've got their 113,000 tons from North American Lithium through Siona, but then they also have the offtake from us that they can supply to LG Chem and Tesla. So at the moment, Tennessee won't see our product for the first year or two in production. That will go to the international market and their existing customers.
Great, thank you very much, Keith. And with that, we'll close the Q&A, and I'll be handing back over to Jake. But just to say thank you, everyone. Apologies for the late start, but I think we've made up for that with the late finish, and in fact, an extra 2 minutes on that. So thank you to Ewan and Razak for joining as well from Ghana. And with that, I'll hand back over to Jake.
Perfect. Len, Keith, you and Abdul, that's great. Thank you very much indeed for addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Keith, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Certainly. Thank you, Jake. Well, once again, thank you very much for all the investors and prospective investors joining us today on this call. It's very important for us to keep our shareholders up to date of how we're progressing. As I mentioned at the start, we know we've been a little bit slow on news flow and exploration because we've been extremely focused, laser focused, if you will, on developing the project and bringing it into production. This was a good opportunity just to recap on what we are doing in the exploration side. There's a lot of growth potential, a lot of unexplored ground for us to still work. We're very mindful at how we spend our money in the short term until we receive more funds, but certainly identifying targets and doing smaller campaigns as we head into production is what we want to do. We'll see organic growth over the next 2 to 3 years, and once we see massive cash flows, that's when we want to really expand and be very aggressive on drilling. So thank you very much for joining us, and your feedback is much appreciated.
Keith, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Atlantic Lithium Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.